The numbers are in for December 2022. So a few things I want to go through before we get into the statistics. So this past year, we've been dealing with a lot of change with interest rates going up, the marketplace correcting slightly, investors swooping in, and so on. So just a quick recap that on December 7th, we had yet again another Bank of Canada rate change with the overnight rate increasing by 0.5%. And so for those with variable rate mortgages, that was about $29 payment increase per $100,000 borrowed. So the Bank of Canada did hint that they may adopt a wait and see approach over the next year, where they will just monitor to see if their monetary policy is having the desired long-term effect, and maybe the rate increases are over. What do you think? So comment below if you think that that is the case or not. Now let's get into the monthly statistics. Starting off looking at the overall Calgary marketplace. Traditionally, during the month of December, we see a slowdown in activity, listings, and sales due to the holiday season, which is what we saw. December sales eased and listings were at the lowest that they've been for a December in over a decade. Benchmark prices eased to $518,000, which is down nearly 5% from the peak price that we saw in May, but it is almost 8% higher than last year's levels. So Calgary does continue to report activity that is better than levels that were seen prior to the pandemic and higher than long-term trends for the city. At the same time, we are faced with low inventory levels, which have prevented a more significant adjustment in home prices this year. The detached market has felt most of the impact of the higher interest rates, with a pullback in sales in the second half of the year, which showed a year-to-date decline in sales of over 7%. We had seen some gains in new listings in Q4, with much of that growth occurring in the upper end of the market, supporting more balanced conditions. In the lower priced homes, supply levels are quite low relative to the sales activity, which did cause this segment of the marketplace to favor the seller. Overall, the detached market has seen activity shift away from the strong seller's conditions that we saw earlier this year, and we are trending towards more balanced market conditions overall. Prices in the detached market have trended down in the second half of the year, as the December benchmark price of $619,000 has eased by just over 4% from the May high, which was sitting around $648,000. Although we are seeing adjustments in the sector more recently, it did not completely correct what we saw in the earlier gains this year, with the benchmark prices sitting just over 14% higher than last year in December. Annual price growth has ranged from a high of 19% in the Southeast, North, and Northeast districts to a low of nearly 8% in the city center. Now going into the semi-detached sector, we have seen the year-to-date sales decline by nearly 3%. We are, however, seeing activity far stronger than the long-term trends and levels that were reported prior to the pandemic. So new listings are trending downwards, which is keeping inventory and months of supply relatively low compared to the historical levels. Market conditions are not as tight as we saw earlier in the year, and there has been some downward pressure on prices, with the peak being in May at $584,000, and now we're seeing about a 4% decrease sitting at $563,000. Overall, the benchmark prices are sitting nearly 12% higher than this time last year, with the North District reporting a higher annual price gain of over 18%. The townhouse sector is very attractive to buyers. Reductions in listings have seen an effect on the number of sales. However, the annual sales reached a new record high. Not only was it a record year, but sales were nearly double the long-term trends. What's happening is the higher lending rates are driving purchasers towards the more affordable product, and they are landing in that townhouse and the condominium sectors. The inventory levels are extremely low, and this is ensuring that this segment of the market is favoring the seller. Prices have eased by almost 1% from the June peak, but overall, year to date, we're sitting 15% higher than last year. And I did save the best for last with the condominium sector. Unlike the other property types, the sales for condos have continued to rise above the previous year's levels throughout the year, which is causing the year-to-date sales to rise by 50%, which is another record high. The demand for affordable product, along with renewed investor interest thanks to the rental rate growth, this helped support sales growth overall. Inventory levels in the sector are trending down after several years of being extremely oversupplied, and this sector is experiencing some much needed growth. Tighter conditions are seen in this sector, and this is supporting the annual price gains of nearly 9%, with the benchmark price currently sitting just under $275,000. While the price gains occurred across every district, citywide prices remain well below the previous highs reached back in 2014. So with that, we know that there's a lot of room for growth in this sector here. So that's all for this month. Stay tuned for my predictions video discussing what I think 2023 has in store for us. I'm Hripko with Royal LePage Benchmark. Thanks again for tuning in.